Hey guys, it's Nick, and in this video I want to talk about the IRS cracking down on crypto investors. I'm going to talk about how the US classifies cryptocurrencies and some things you may not know about cryptocurrencies. So stay tuned, you'll learn a lot about what your requirements are if you are a cryptocurrency investor. So first, let's talk about what a cryptocurrency is according to the US government. According to the government, it is not a currency, it is property, just like a stock. So what that means is every time you sell crypto or buy something with crypto, which is really exchanging crypto for US dollars and then buying something, you have a tax liability there potentially. So the story that you can go and buy a Tesla with Bitcoin is true, unless Elon Musk changed his mind recently or whatever. But just think, if you go and buy a $100,000 Tesla, not only do you pay the state tax, but you potentially owe tax to the federal government for your gain on that cryptocurrency. So let's say you bought one Bitcoin at $20,000 and Bitcoin went up to $100,000, and then you go and buy a Tesla thinking that that's it. No, according to the government, you owe tax on that $80,000, depending on if it's short-term, less than a year that you held it, or long-term, longer than a year that you held it. Now, I know they say that cryptocurrencies are going to be used for all kinds of transactions, kind of like a Visa card or something, but when you buy something on a credit card, you don't have a tax liability for that purchase. But with cryptocurrencies, just going and buying a Kit Kat or a soda or filling up your car with gas could potentially be a tax liability. And you also have to keep track of which Bitcoins you sold compared to which Bitcoins you bought, which lot, and all that stuff. It could get really, really complicated. And I'm sure that's probably why the government classified it that way, just to kind of hamstring it so it doesn't become kind of like a currency. Now, a lot of people are probably thinking, I don't care what the government thinks, this thing is anonymous and untraceable. No, it's not, and it's getting a lot more traceable as we go forward. Now, I don't know if you remember this, but the government did the same thing with untraceable Swiss bank accounts. They basically broke the Swiss secrecy and got the banks to start informing on their clients. And some few years back, the IRS wanted to start taxing people who sell things on eBay, and they got PayPal to start reporting to the IRS people who did more than $20,000 in sales on eBay or like 200 transactions or something like that. And so the IRS is continuing that playbook, and this time they're going to the cryptocurrency exchanges to summons them and try to pry some information about their clients from them. A way to think about it is like this. If you say to yourself, hey, I want to drive my car from Florida to New York City, and I don't have a GPS in my car, and I don't have my cell phone with me, so I can do it completely anonymous, right? I'm just going to drive and nobody's going to know that I went there, right? However, the government has license plate readers all along the highways, in the toll booths, at the bridges, at the tunnels. This is kind of the same thing that the IRS is doing now by going after the exchanges and seeing what information they transmitted to other exchanges and things like that to find out who's doing the trading, what they own, and trace it back to people who are hiding their cryptocurrencies from the US government. So here in this Zero Hedge article, it says that the DOJ and IRS are digging into Binance amid whispers about the allegations of tax fraud, manipulation, AML violations, blah, blah, blah. So here it says there's 2 new IRS investigations to catch crypto tax cheats targeting various exchanges, and a judge in Boston approved the IRS summons to the payment company Circle and its affiliates, including crypto exchange Poloniex. And in May, San Francisco approved similar summons for records from Kraken. So it says both of these summonses apply to customers who have traded more than $20,000 in crypto in any single year between 2016 and 2020. It's not hard to trade $20,000 in crypto or stocks or anything. If you know, you just do a few trades in a year in the stocks and you get a report at the end of the year saying that you did hundreds of thousands or even millions of dollars in stock trades. So this is a very low barrier to entry that they're looking for these people. And in 2016, the IRS received approval for a similar summons for Coinbase and obtained information about 13,000 customers. And so this tactic they've been using has been working. The agency said it received more than 1,000 amended tax returns and collected $13 million from crypto holders with more than $20,000 of transactions, plus another $12 million from other crypto notices, and audits are ongoing. So what triggers a tax liability? Well, anytime a cryptocurrency is bought or sold or spent, it's a taxable transaction. And if you trade Bitcoin for Dogecoin, for example, even that transaction has tax exposure. So I'm going to explain what are the three kinds of exposures you have as a cryptocurrency investor in the US. First is with the IRS. And so there's two parts to this. One is the tax liability. Just like a stock, if you buy a stock for 10 and you sell it for 20 and you hold it for less than a year, then that's a short-term gain on the $10 gain. If you hold it for longer than a year, then that's a long-term capital gain. Same exact with cryptocurrency. So you are required to file your gains on your tax return with the IRS, all of those gains that you have. The second thing you need to do with the IRS is to file a form 8938, and I've done a video on that, and I'll show it at the end of this video. And that is a form stating your foreign bank accounts, foreign financial holdings, if they are above a certain threshold. So the IRS Form 8938, Statement of Specified Foreign Financial Assets, this is a form that you have to attach to your tax return when you hand in your tax return. And the threshold is if you are an individual living in the US, unmarried, then you have to file this form if the total value of your assets, meaning foreign assets in a foreign bank account or foreign crypto exchange or something like that, was more than $50,000 on the last day of the tax year or more than $75,000 at any time during the year. And if you're married, those amounts double to $100,000 and $150,000. Now, if you're single and living outside the US, then the threshold is $200,000 on the last day of the year or more than $300,000 anytime during the year. And for married couples, it's double that. So what does that mean? Well, if you live in the US and let's say you have your cryptocurrency in an exchange that's in a foreign country, an example is you have one Bitcoin and it's worth $20,000 in January, and sometime during the year it goes up to being worth $80,000. That thing could fall all the way back down to $30,000 before the end of the year, but you're still required to file the 8938 because the high watermark during the year was above $75,000, even though the amount at the end of the year was less than $50,000. So the high watermark is what they look at, and that is the aggregate of all your accounts. So that includes money in a bank, money in a brokerage, and money in crypto or cryptocurrencies in a foreign exchange. So to recap, the IRS part of it, they want to know how much money you gained from trading cryptocurrencies during the year so they can charge you tax on it. And then they also want you to file the 8938 if you have your cryptocurrency or a combination of cryptocurrency and cash and stocks in a foreign financial account. So those two things go on your IRS tax return. Now for the other thing, which is Fbar, and this is a form you have to file with FinCEN, the Financial Crimes Enforcement Network. Nice, right? I also did a video on that. I'll leave it at the end of my video. You can check that out on how to file the Fbar by yourself. You don't need an accountant to do it, but the Fbar has nothing to do with your IRS tax return. It's completely separate, and you file it on the FinCEN website. Now, as of right now, FinCEN says you are not required to file Fbar for virtual currency. However, that is going to change. So it says currently the report of foreign bank account and financial accounts regulations do not define a foreign account holding virtual currency as a type of reportable account. For that reason, at this time, a foreign account holding virtual currency is not reportable on Fbar. However, FinCEN intends to propose to amend the regulations implementing the Bank Secrecy Act regarding reports of foreign financial accounts to include virtual currency as a type of reportable account. So this is coming, so get ready. And so this is what you're going to need to know about filing for Fbar. And so the Fbar form is also known as FinCEN Form 114, and the threshold for who has to report is a lot lower than the threshold for the 8938. And go check out my video on that. I explain it more in detail, but basically the aggregate of all your financial accounts exceeds $10,000 at any time during the calendar year, then you have to file a Fbar. So if you have, say, $1,000 in cryptocurrency in January and that value goes up above $10,000 during the year, but then falls to below $10,000 before the end of the year, you still have to file a Fbar. It's the high watermark during the year that they care about. So can you just play stupid and pretend you didn't know about this and plead ignorance if they come and track you down? You could do that, but the fines are very high. And so for the IRS 8938 form, it's up to $10,000 for failure to disclose and an additional $10,000 for each 30 days of non-filing after IRS notice of failure to disclose, for a potential maximum penalty of $60,000. Criminal penalties may also apply. Okay, you think that's bad? Look at the penalties for not filing Fbar, Form 114. Civil monetary penalties are adjusted annually for inflation. For civil penalty assessment prior to August 2016, if non-willful, up to $10,000. If willful, up to the greater of $10,000 or 50% of account balances, criminal penalties may apply. So guys, what that means is if they catch you not filing the Fbar and you have a whole bunch of cryptocurrency that you think is anonymous and these exchanges give you up, they could potentially take 50% of the value of your account. And this is not just theoretical. They have done this to a few cases already that's been in the news, not with cryptocurrency, but with bank account balances of some people hiding money. So this website, tokentax.co, lists the common foreign exchanges. So if you have cryptocurrency on these foreign exchanges, this is considered a foreign financial account. And so if you have more than $10,000 during the year in any of these exchanges combined, you can have 1,000 here, 1,000 here, 1,000 here, 1,000 here. If that all adds up to $10,000 during the year, you are required to file a Fbar. So these are the common foreign exchanges. These are the common US exchanges that you do not need to file Fbar if your money or your cryptocurrency is with them. So guys, I'm not an expert on crypto. I don't invest in it at all. But from what I understand, if you have your money in a foreign exchange or your crypto in a foreign exchange, you might want to look at taking it offline and putting it in an offline wallet, or putting it in a US exchange if you trust one of them. But just know that the IRS is coming for you and you can't hide forever with this thing. So you might want to start preparing now for the filings that you're going to have to do and get used to it so that you don't wake up one day and find out that the crypto exchange that you had your cryptos on reported you to the IRS so that they don't get in trouble or whatever. They get a lesser fine or something by selling out their clients, because that's what the IRS does all the time. So I hope you like this video, and if you want to know more about how to file IRS Form 8938 and how to file Fbar Form FinCEN 114, check out the videos at the end of this video. Thanks for watching, guys, and I'll see you in the next one.